Hello guys, so in this video I'm going to talk about the various chart patterns that you are going to be coming across as a trader on different markets like forex, crypto, indices, stocks, etc. So you are going to come across this chart pattern on your charts. These chart patterns are formed by combination of candlesticks. So we have four categories of chart patterns. We have the bullish reversal chart pattern, bearish reversal chart pattern, trend continuation chart pattern, indecision chart pattern. So what is bullish reversal chart pattern? Bullish reversal chart pattern will indicate to you that has been in downtrend for a while, that the price has been going down. Once you notice bullish reversal chart pattern, it's telling you that the trend is likely to reverse towards the upside. Reversal chart pattern, the price is to the upside. So that's what a bullish reversal chart pattern does. If the price has been going down for a while and you notice a chart pattern, is telling you that the price is going, the downtrend is coming to an end and the trend is going to switch towards a uptrend. So bearish reversal chart pattern is just opposite of bullish. Bearish reversal chart pattern, for example, if the price is going up and you notice a bearish, it means that the trend is going to downward. It means that the uptrend is coming and the downtrend is about to start. So continuation chart pattern, for example, you have an uptrend, a continuation chart pattern like head and shoulder chart pattern, inverse head and shoulder, bull flag, a pennant. A pennant could be in form of symmetric triangle. Once you notice it, it means the trend, if it's an uptrend, is going higher. If it's a downtrend, it's going to continue lower. So indecision chart pattern, they tell you that the market is in equilibrium. The market is in an indecision phase. That means the market could break towards the upside or it could break towards the downside. An example of indecision chart pattern is this symmetrical triangle here, symmetrical triangle. So okay, now I've explained the categories of chart patterns. I said we have the chart pattern, bearish reversal chart pattern, trend continuation, and indecision. So for bullish reversal chart pattern, you have a ascending triangle, you have falling channel and wedge, you have triple bottom, cup, and handle. Those are bullish reversal chart pattern. So for bearish reversal chart pattern, you have a descending triangle, you have a rising channel, you have a double top, you have a head and shoulders, you have a handle. So for trend continuation chart pattern, you have bull flag, bear flag, bear flag, heads and shoulder, inverse head and shoulder. Those are trend continuation chart pattern. So for indecision chart pattern, you have the symmetrical, over here, symmetrical triangle. That's in the chart pattern. So the best to trade this chart is to trade them with the trend. So for example, if the price is in an uptrend, you are going to be looking for bullish reversal chart pattern. If bullish reversal chart pattern and trend continuation chart pattern. If the price is downtrend, you are going to be reversal chart pattern and bearish trend continuation chart pattern. So that's the type of chart patterns you are going to look for. So how do you know if the price is in an uptrend or in a downtrend? So for you to identify your uptrend and downtrend, you have to use an indicator called the moving average, EMA or SMA. So EMA means exponential moving average, while SMA means a simple moving average. They work almost in the same way. You can use them to identify your trend. So if you add a 200 period moving, 4 categories of trend, we have period moving average, which indicates a long-term on long-term trend. We have the 50, which indicate the mid-term trend, and we have the 20 short-term. If the price is above the average, you say that's the price is in a long-term uptrend. If the price is above a 200 period moving average or 100 period moving average, you say long-term uptrend. If the price is below it, you say it is a long-term downtrend. And if the price is above a 50 period moving average, you say it is a mid-term uptrend. If the price is below it, you say it is downtrend. While if price is above a 20 period moving average, you say it's a strong. And if price is below 20 period moving average, you say it's a strong downtrend. So how does a moving average looks like? So this a chart, this a chart, this your moving average, this a 200 period moving average, 200 period moving average. That's this red line. You can see the price is below the 200. So currently you can say the current price is over here. Currently you can say the price is in a downtrend. Price is below the 200 period moving average. So this how your moving average looks like. You can change it to 100, you can change it to 50, the type of trend you are. So that's how to use a moving average to identify trend. So now I want to talk about these various chart patterns. Now I want to pick them one after the other and show you how and illustrate to you how they are formed on your chart. Okay, so another thing to emphasize is that respecting 200 period moving average, 100 period moving average, or 50 period moving average, you are going to be bearish and bullish. But if the price is respecting 50 period, 20 period moving average, you are going to be looking for trend continuation pattern, because 50 period moving average indicates an LD trend. 20 period moving average indicates a strong trend. A trend could be uptrend or downtrend. So 50 period moving average indicates an LD trend, while 20 period moving average indicates a strong trend. So for a trend to continue, it has to be healthy or strong. Use 50 period moving average and 20 period moving average to trade trend continuation patterns like a bull flag, head and shoulder, and inverse head and shoulder. So that's it. So for indecision trend, you can use any one. If it's a symmetric triangle, you can trade it along 200 period moving average. Any this thing, it doesn't matter. Sometimes a symmetrical triangle can be a pennant. The symmetrical triangle is formed on a higher time frame, a daily. You can call it symmetrical triangle, but if it is formed in like 1 hour time frame, you can call it. So that's it. I'm going to pick this chart patterns one after the other and explain them. Ascending triangle, descending triangle, symmetrical triangle, ascending triangle. So I'm going to draw a line of resistance, which I'm going to put color red, and draw a line of support, which I'm going to use a color green. So for ascending triangle to form, note I said here is your resistance and here is your support. That's the green line is your support and the red line is your resistance. So for ascending triangle to form, you are going to have an horizontal resistance and a diagonal support. Horizontal resistance and a diagonal. So let me remove this one first. So you have this horizontal resistance and a diagonal support. Let me use yellow. Let me use green for the support. So that's it. And for ascending triangle, price is going to be making higher highs into resistance. Let's say the price come down to the support, it bounce off to the resistance, to the support. So this how ascending triangle to move on your chart, and as it approaches the top of the resistance, the price will break out. It will break out to the upside. So the price, this making like this are movement of price, say candlestick. That's on your chart. Let me illustrate it again. So price comes to the support, go back to the resistance, come to support, goes back, come to support, goes back to resistance, comes to support, then break out. So if the price is above let's say 200 period moving average or 50 period moving average or 100 period moving average, that is uptrend. So you trade this chart pattern with when the price is above the moving averages. That's when it is stronger. So you might be asking how. Okay, let me explain more about this chart pattern. So we call it ascending triangle because price is making higher high, this and high, this and higher high towards a resistance. So the price is making higher high towards a resistance. So that's a ascending triangle. Is to trade it with a uptrend. So the next chart pattern I'm going to talk about is a descending triangle. So descending triangle is just an opposite of a ascending triangle. For descending triangle, you are going to have an horizontal support and a diagonal resistance. Horizontal support and diagonal resistance. So this is the support and this is the resistance. Price is going to be making I towards the support. Let's say the support, it goes back up I. We say lower I because here this place is lower than this place. It makes a lower I to on resistance. It comes back to resistance. It makes another lower. That's how it's going to be making lower I till it breaks down. So as a trader, you have to be selling these points, selling at this point. So these are lower I, lower I, lower I, lower I, lower I towards a support. You know, ascending triangle is making higher I towards a resistance. So that's the two major differences. So you buy here, you sell at this point. So for you to be more successful with this chart pattern, to trade it downtrend. Let's say this red line I just drew now is a moving average. So you have to trade it when the price is below on 200 period moving average, or the moving average, any one of them. So that's a downtrend. So another chart pattern I'm going to talk about is the rising channel, falling symmetrical. So for symmetrical triangle is another form of triangle that this how the price is going to form symmetrically. It means it's going to form like this. So a symmetrical triangle, price could break towards the upside, towards the downside. That's why we call it indecision chart pattern, because the price could break towards the upside or towards the downside. It depends. If the price is in an uptrend, that means if the price is above moving averages, then you expect it to break towards the upside because that's an uptrend. But if the price below moving average edges, you expect it to break towards the downside because that's a downtrend. So expect the price to move in a symmetrical triangle. Let's say scenario 1, if the price is in an uptrend, expect it to break to the upside. So the price will move in a symmetrical triangle like this. Then it breaks out. It breaks out because it's an uptrend. So for the case of breaks out towards the upside, but for the case of downtrend, it's going to move like this. And breaks down because because the price is below probably 200 period moving average, 50 period moving average, or average. So that's how you illustrate. That's how symmetrical triangle is formed. So another chart pattern I'm going to talk about is the rising channel, the falling channel. So the falling channel is a bullish reversal chart pattern, and it looks like this. So falling channel looks like this. So this is a falling channel. this is a falling channel, and the price is going to be moving like this, back and forth. So, and because it's a bullish reversal chart pattern, you expect it to break towards the upside. So that's a falling channel. So we also have a falling wedge. Falling wedge looks like a descending triangle, but it's not a descending triangle. It looks like this. And you have this. So this falling wedge is a triangle that is pointing down, and the price is going to be moving within it like this. It is a bullish reversal chart pattern, and just like the falling channel, they means the same thing. The channel and the wedge, they means the same thing, just that one is rectangular and one is a triangle, breaks up to the upside. So that's a falling. So what about rising channel? Rising channel is like this. Rising channel is like this. The price is going to be moving, and rising channel is a bearish. Well, I don't think I drew this channel very well. This rising channel, this is how it looks like. This is how it looks like, and the price is going to be moving within the channel. This. So it is a bearish reversal chart pattern. Then you expect it to break down because it's bearish, especially if the price is below the moving averages. So that's a rising channel, and you also have a rising wedge, which looks like this, So just like a rising channel, rising wedge is also bearish. So the price will eventually break down too. So that's a rising channel and a rising wedge. They are both the same thing, almost the same. They both have the same price action. So another chart pattern I'm going to talk about is the bull flag. So we call it bull flag because it looks like, let me try and see if I can find this rising channel. So for bull flag, you will have the price. Let's say the price has been an uptrend like this. The price has been trending up in a strong uptrend. That is when the price is obeying the 50 or 20 period moving average, and suddenly the price starts consolidating. So that's when you have your flag pattern. That's when you have your bull flag. So this is your bull flag. So the price has been an uptrend, then it starts consolidating. So if the price is above the 50 period moving average or 20 period moving average, it's going to break towards the upside. So that's a bull flag. Why bear flag is just the opposite of a bull flag. let's say the price has been a downtrend. It has been a downtrend. I'm just illustrating. I'm not trying to be perfect with what I'm drawing, but just illustrating. And let's say the price starts consolidating like this. Okay. So downtrend, and it forms something like that's your bull. And if the price is 50 or 20 period moving average, is going to break down. So that's your bull flag. Then your double top. Remember, I said this line here is your support, here is your resistance. So double top, this is our double top. Double top is a bearish reversal chart pattern. So the price is high and it comes down to support, then it makes another top. And because it's a bearish reversal chart pattern, once it comes back to this support, it's going to break down. So we call it double top because this one top, this another top, and it's a bearish reversal chart pattern, especially when price is in a downtrend. So double bottom is a bullish reversal chart pattern. Double bottom is just an opposite of double top. So the price will come to support, make a top over here, goes to resistance, comes back to support, make the second top, and the next time it goes to resistance, it's going to break it. So that's a double bottom, and it's a bullish reversal chart pattern, especially when price is in an uptrend. So triple top is just like a double top. So sometimes the price might form like this, one top, comes back down, form another top, two top, and form another one, triple top. So triple is a bearish reversal chart pattern, and the next one is going to break down. So we call it triple top because you have one top, two top, triple top, and it's a bearish reversal chart pattern, and you expect the price to go down. So you can be selling at this point here and setting your stop loss above. So triple bottom is just an opposite of triple top. Triple bottom is a bullish reversal chart pattern. 1, 2, 3. So this is your triple bottom, 1, 2, 3, and the price is expected to break to the upside because it is a bullish chart pattern. Remember, this red line is your resistance, this one is your support. And you also have the head and shoulder. The head and shoulder is a bearish reversal chart pattern. It's a bearish trend reversal chart pattern. For example, if the price has been going up, and suddenly it forms an head and shoulder. It forms an head and shoulder. It means it's going to go down. It means the trend is coming to an end and price is going to head down. So that's how your head and shoulder chart pattern is formed. For head and shoulder chart pattern, here is the neckline. Here is the neckline. Here is the left shoulder. Here is the head, and here is the right shoulder. It is a bearish reversal chart pattern, which indicates that the trend is going to come to an end and move to a downtrend. So for head and shoulder, which is bullish, for example, you are having a downtrend like this. So for inverse head and shoulder, you are going to let me draw it again. For inverse head and shoulder, you are going to, in a downtrend like this, then the price keeps on going down. It forms an head and shoulder chart pattern like this. So it forms an head and shoulder chart pattern like this. So this one over here, so here is the neckline, here is the right shoulder, here is the left shoulder, and here is the head. So this one over here is bullish, while this one over here is bearish. This one is going to indicate to you that the price is going, after the downtrend, the price is trying to break to the upside and starts a uptrend. Why this one is telling you after the uptrend, the price is consolidating for a downtrend. So that's a head and shoulder chart pattern. So the next this thing, we talked about the head and shoulder and inverse head and shoulder. So the cup and handle chart pattern. So for cup and handle chart pattern, you are going to have, let me use the curve. You are going to have a price action. That price is going to move in a space like a cup like this. Then you have the handle. Then you have the handle. So this is a cup and handle chart pattern, and it is a bullish reversal chart pattern. So the price is going to be moving, let's say, it's going to be moving within this cup, it's going to be moving within here. Then where you up to break out is at this handle here, that's the red part. So because it's a bullish reversal chart pattern, you expect it to break to the upside. So that's a cup and handle chart pattern. So for inverse cup and handle, so inverse cup and handle is just the opposite, and inverse cup and handle is a bearish. So for inverse cup and handle, the price is going to be moving like within this is going to be moving within this cup. Then it consolidates and enters the handle. So at this point is where you expect it to break to the downside. So like as I've said, this is just illustration of the various chart patterns, and in my next video I'm going to go to the actual chart and try to pick out these chart patterns for you. So here comes the end of this tutorial section.